This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks slide following Wall Street sell-off as fears of a deepening U.S. trade conflict with Europe and turbulence in the bond market unnerve global investors. President Donald Trump's Air Force One returns to the U.S. due to an electrical issue as the U.S. president heads to a Davos gathering overshadowed by his growing fight with Europe. And much more coming up from Davos, including conversations with Egypt's investment and foreign trade minister, as well as the CEO of the UAE's G42. It is a busy Wednesday morning here. It has just gone past 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and plenty to get to, including geopolitics, as well as that highly anticipated speech from President Trump. But still, markets are digesting what was a pretty brutal day across the board on Tuesday. If we just take a look at where we are right now, it is a day after what really seemed like a sell America trade, at least setting in for Wall Street, though we are seeing a bit of a reversal, at least in terms of some of the futures. If you take a look at U.S. equity futures, reversing some of those losses that we did see on Tuesday, S&P futures up just about 0.3% there. Significant because what we did see at the close on Tuesday was the S&P actually dropping and closing the day more than 2% down. That is significant because we had seen the index erasing all of its gains for 2026. Also, the NASDAQ looking like it's in negative territory now for 2026. So really a broad sell-off on Tuesday. But potentially we're seeing some signs of stability. That also feeding through ever so slightly into treasuries. Right now, the U.S. 10-year yield, as you can see there, backing off just about a basis point there to trade at about 4.2746. What we had seen on Tuesday, though, of course, we started the show yesterday talking about a lot of concern around the domestic market in Japan, a selling off of JGB bonds on the long end. And also in the U.S., we saw the yields on the benchmark 10s actually touching a fresh high on Tuesday to around 4.307%, its highest since August. So we're watching closely to see where we see treasuries and also global bonds trading today. Gold, though, is also notable moves that we're seeing up just over 2% there. Still seeing quite a bit for safe havens amid some geopolitical tensions globally. And we have Brent crude on the board down just about 1.2%. There is a bit of geopolitics sentiment that's setting in there, as well as supply factors feeding into the price action. And really quickly, let's just bring you our terminal chart, and that is focusing in on the VIX index. It is back above 20 amid a lot of this geopolitical tension. And our markets editor, Anthony Stephen, noting a surprising unity actually between the U.S. and European VIX and DAX index, potentially signaling some unity between the partners, and potentially that will calm the markets. But still, we will wait to see how that plays out throughout the day. Let's, though, check in on how the markets in Asia are faring. Winnie Xu is in our Hong Kong studio for more on that. Winnie, it's looking like a bit of a mixed picture on the board behind you.
Yeah, exactly. Morning, Jen. You can see that, yes, MSCI Asia here is tracking losses from overnight in the U.S. But worth highlighting, you were talking about how the U.S. is under lots of pressure with year-to-date gains pretty much flat. But we're talking about MSCI Asia up some 5% or so year-to-date. So a bit of a resilience there, and also supported by overall a weaker dollar trend. Now, in terms of a Kospi index, under a bit more pressure after that strong rally, having risen about 16% so far this year. CSI 300 actually gaining on the gains in the chip sector. And speaking of the currency in China, the yuan is actually weakening a bit after PBOC set a weaker fixing just to slow down that appreciation of the currency against the dollar. Now flip the board and take a look at the Japanese market, because you mentioned that the center of attention still is in Japan. And we're talking about bond yields here falling because Finance Minister Satsuki Katayama actually mentioned in the Davos meeting that she asked these market participants to calm down, and that is actually supporting these rebounds in terms of the Japanese bonds. Back to you, Jen.
All right, Winnie Xu in Hong Kong. Winnie, we'll check back in with you in just a bit. Let's dig into market insights a bit more. And joining us is Ketaki Sharma, founder and CEO of Algorithm Research. KTK, thanks so much for joining us. So I mentioned this at the top of the show. We did see the VIX index touching the highest level since November this week as we're seeing markets sell off. A bit of stabilization, though, to start this Wednesday. Based on your own economic indicators, can you foresee what the next shoe to possibly drop could be?
Yeah, thanks, Jennifer. So yes, the VIX has been really volatile all this while, actually right from 2025. And I think if we zoom out a little bit and look at 2025, we had seen VIX move out quite a bit. So I think what we are going to likely see in 2026 is actually, a repeat of what we had seen in terms of volatility in the markets, new announcements, because as we all know, there are structural policy shifts in the US that is happening at the moment, from globalization and international trade-driven economic growth. US is moving towards localization and inward-looking policies and domestic demand to propel growth. So that's a structural shift, and therefore the policies are a little bit hard to digest at the moment, and we can see that in the VIX, rising and spiking the way it is.
Are you expecting treasuries to potentially reverse then from their current positions? We're seeing Morgan Stanley had recommended investors exit their longer dated positions for treasuries about some of the optimism, the previous optimism about the U.S. economy. Where do you see bonds tracking right now, given a lot of this uncertainty?
So the bond market very closely watches out for a couple of things. Number one, of course, is the fiscal deficit and how that is panning out. So that is something that will be really key to watch out for. And the other thing, of course, it'll be important to see what's happening on the Fed front in terms of the Fed independence. So those are very key developments. And I think the bond market is likely to see a lot of volatility given the current circumstances and the recent developments at the Fed as well. So those are, and there's one silver lining here, of course, so industrialization 4 you can already see that fueling the GDP growth, and productivity gains are probably, going to help there. So fiscal deficit as a percentage of GDP with a bigger GDP would likely come to rescue. So that's what we are assuming at the moment.
Let's focus on the Fed independence, because that is happening in the backdrop. Is that still a focus of the markets, and how much so do you think investors are factoring into potentially who is going to be that next Fed chair, especially because we did hear from Treasury Secretary Scott Bessent yesterday speaking about Jerome Powell being at the hearing of Lisa Cook. How does that play into the sentiment right now?
So that's a key thing for the international investors for sure. How the developments pan out would be something that the investors all over the globe would be watching out really closely. And, that also impacts how the rates cut happen. So our base case, of course, we are looking at 0 cuts up until for the next 3 meetings. And if the new chair comes in, 2 cuts, largely because we assume that the new chair would be much more dovish than the current chair, Powell. So in terms of the trajectory, the rate cut trajectory, that is something that the markets would be closely watching out for.
Does it matter which Fed chair we actually see nominated? President Trump says he knows who. Your expectations is that we will see a more dovish chair. What are you telegraphing then who you think the next chair will be?
I mean, your guess is as good as mine, but I think the new Fed chair would certainly be more dovish than the current chair, Powell.
And let's just talk about then the divergence potentially if we see the next chair diverging away from what we are seeing from global central banks. Does that factor into your models for global growth in 2026? It's hard to predict where things will go from here, but how does monetary policy then factor into some of the models that you've outlined?
Yeah, so I mean, it'll be very growth supportive. So what we are seeing now is, looser fiscal policy, looser monetary policy, and likely this getting better in terms of, more rate cuts in the offing. So it's very pro-growth. What we would really be cautious about is how with cheaper credits, are there any asset price bubbles that are forming? Because in the past, we've seen this happen a number of times. We've seen this with the housing crisis that happened earlier. So that's something that is key to watch out for. We are already seeing, commodities spiking, in the face of geopolitical risks, but also a lot of, loosening in monetary stance. We believe that we are already almost at the neutral rate. We are already there. And, two more cuts would make the policy really loose, potentially leading to risks of asset price bubbles.
Yeah, plenty to watch out for. Ketaki Sharma, founder and CEO of Algorithm Research, joining us there to start us off on the markets. Thanks so much, Ketaki, for joining us. Now, coming up, war of words. We get the latest on the growing U.S.-Europe feud. That's as we wait for President Trump's speech in Switzerland later today. We are live in Davos next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabisaja in Johannesburg. Greenland's prime minister says that the island's peoples need to start preparing for a possible military invasion. That's as U.S. President Donald Trump continues to threaten taking over the territory. Meanwhile, Trump says he doubts his use of tariffs to strong-arm allies will get disruption from any trade deal with the EU.
I doubt it. Look, they need that agreement very badly with us. They really do. They fought very hard to get it. So I doubt that. But we'll see what happens. We have a lot of meetings scheduled on Greenland.
And this is why the proposed additional tariffs are a mistake, especially between long-standing allies. The European Union and the United States have agreed to a trade deal last July. And in politics, as in business, a deal is a deal. And when friends shake hands, it must mean something.
Without collective governance, cooperation gives way to relentless competition. Competition from the United States of America through trade agreements that undermine our export interests, demand maximum concessions, and openly aim to weaken and subordinate Europe, combined with an endless accumulation of new tariffs that are fundamentally unacceptable, even more so when they are used as leverage against territorial sovereignty.
And as day 3 of Davos kicks off, the focus will be on President Trump's highly anticipated speech. And for more, we have Horizons anchor Jumana Bersetchi, who has been there on the ground and covering this extensively for us. So, Jumana, quite a bit of variance that we're hearing from European leaders. What should investors listen for in his speech? What are the signals for Trump's potential next move in his Greenland and also his tariffs?
Yeah, well, it's anyone's guess. Today is finally here. Today's the big day. It's 6 in the morning, roughly, Davos time. And as you can see behind me, it's still pretty calm, but that's not going to last. In a few hours, security is going to be ramped up dramatically, already is, in anticipation of the arrival of the president. A few mechanical issues overnight. Air Force One had to be rerouted. It's on the way now to Zurich. So he should be getting here in a couple of hours and is expected to deliver that speech. But if all goes to plan, there might be a delay in the schedule now at 2:30 p.m. local. So here's the thing. The irony is the speech is supposed to be about affordability, which is namely directed at his obviously domestic market. It is going to be a big year in the U.S. with the midterms coming up. But I think the focus for investors really is going to be about his tone and whether he's going to take this feud with European allies to the next level. And what you've seen amongst world leaders just in the last couple of days is very disparate responses. You've got the likes of French President Macron calling for the Europeans to use their anti-coercion tool, which is something they've not used in the past. You've got Prime Minister of Canada, Carney, saying that the rules-based order is over, that if you are not at the table, then you're on the menu. You've got others, the German Chancellor urging restraint. And so it will be really interesting to see whether President Trump uses this as an opportunity to actually negotiate with European allies and come to some settlement that is capable of appeasing all parties. And we know that his style tends to be go all in at the beginning, say something extremely outrageous, but then dial it back down with the hope that they can come to some negotiated settlement. So I think investors are going to be watching out for that. But let's not forget as well, he will also be here talking about some of the successes in our part of the world, in the Middle East. Tomorrow there's going to be the signing of the Board of Peace. Unclear exactly which members are going to be on that board, but I do expect some part of the discussion today, or at least some of his bilaterals, to involve conversations around the situation in the Middle East, because as we know, it is a big priority of his as well. So all of that on the agenda today when we watch out for his speech, which may be delayed now.
Yeah, and Jumana, I know you noted yesterday that the theme for Davos is a spirit of dialogue, so potentially we do see more dialogue happening. When, based on some of the interviews that you've had and the people you've spoken to on the ground, you noted some of the leaders who have spoken out. How would you characterize the mood? Is there more room for negotiation, or give us a sense of what it's feeling like there?
Yeah, so there's always intention and there's action, right? So yesterday, I think one of the big stories that dominated the airwaves was this announcement by the Danish pension fund that they were looking to sell out or no longer invest into the U.S. Treasury market. That was a big deal. And actually yesterday, you were talking about it in your market recap, we did see a pullback in risky assets. And I think there was some concerns that maybe the sell America trade would come back again, that international community would start actually questioning the creditworthiness and the extent of the partnership with the United States in the coming years. That being said, our colleagues have spoken to many senior voices, including the likes of UBS's Sergio Ermotti in an interview yesterday, and even he was saying it would be actually almost unthinkable for institutional accounts to go down that route, and they would be shooting themselves in the foot. So I think there is some concern that all of this geopolitical anxiety, all of the things that Trump is talking about may have effects on the markets. But what I would say is, if history has taught us anything out of this Trump administration, the only restraining influence on Trump has been the markets. And so he probably would have looked at the price action yesterday. There is a reason that the Treasury Secretary, Scott Bessent, Howard Lutnick, speaking to investors yesterday, urging calm heads to prevail, cooler heads to prevail, and for those trade deals that are already agreed on to remain intact, because there is beginning to be a bit of a market impact. We'll have to see if that continues in the coming months.
Yeah, of course, and seeing the VIX spiking is an indicator of that as well. Bloomberg's Jumana Bercetchi in Davos. Thanks so much, Jumana. We'll check back in with you in just a bit. And you can see President Trump's special address to the World Economic Forum at Davos live on Bloomberg Television later today at 5:30 p.m. across the Emirates. That's 1:30 p.m. in London. And we have plenty more ahead. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Egypt's trade and investment minister says that global supply chain shifts could benefit the country. Speaking to Bloomberg's Jumana Bercetchi in Davos, Hassan Khatib also said he is cautiously optimistic when it comes to resumption of traffic on the Suez Canal.
We're seeing the global trends and shifts in the supply chain as a positive dynamics for Egypt. Egypt's location is unique, and we're centered in 3 continents, Europe, Africa, Middle East. and you have trade agreements with all of these countries, almost 70 markets that are open with free trade agreements. And our competitiveness are now in play, whereby the supply chain shift can be very beneficial to any corporate that actually wants to produce to serve this wider three continents that we're centered in. And that's what we're seeing. We're seeing investments from European companies, American companies, Asian companies, Chinese, and every company that exists in Egypt is actually expanding because, again, the cost advantages and the expansion that we've done in the infrastructure makes Egypt now ready. I mean, just in ports, we expanded all of our ports, both on the Red Sea and the Mediterranean, to levels that we've never seen before. So we are ready from an infrastructure point of view.
So I need to ask you about transit through the Suez Canal. Last year, we spoke about the revenue hit since 2023. Yes. I'm curious to see where that number sits now. And also, Maersk announcing that they're going to start using the canal again. Is your expectation that others are going to follow through too?
We're cautiously optimistic because we're speaking to most of the players. They are also cautiously optimistic. We're going to see a slight improvement. But the numbers, again, will be verified mid-year. So, because, again, these ship liners would need to make sure that, again, the resumption of the traffic is consistent with their original plans. But anyway, I think it's going to be a major boost to our, again, foreign currency proceeds, but also to the resumption of what we want to do in terms of trade in general.
Yeah. I know, again, another big focus of yours has been attracting FDI into certain strategic sectors, be it around the airports, around telecommunications. What can we expect in that domain in 2026? Are there any big deals that we can anticipate?
I don't think it's about big deals. It's about continuation of what we've started. It's the industry and the focus on export is really what we want to do. Our export to GDP is not where we would want it to be. But again, as I said, industry, anything that is, I would call transitionary industries, intermediate industry, Egypt is very, very competitive.
Egypt's Trade and Investment Minister Hassan Al-Khatib speaking to Bloomberg's Jumana Bersetchi in Davos. Now, let's just take a look at where your markets are positioned today. We mentioned Tuesday was quite a brutal sell-off globally, but we are seeing potentially some positivity feeding into futures in the U.S. We see both S&P and NASDAQ futures looking like they're up just about 0.3% there. Eurostock 50 futures marginally lower today, though we are waiting to see what in fact we do hear from President Trump at Davos and where some of the geopolitical tensions between the U.S. and Europe goes for the rest of today. Let's also take a look at treasuries because that has continued to be a significant picture globally. We are seeing treasuries at least marginally down. We see the U.S. 10-year down, just 10-year yield, down about 1 basis point. Significant because we did see a global bond sell-off on Tuesday, some stabilization feeding into global bond markets. Coming up, the U.S. has approved the sale of tens of thousands of advanced AI chips to the UAE's G42. Our exclusive interview with the company's CEO from Davos is next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks slide following Wall Street sell-off as fears of a deepening U.S. trade conflict with Europe and turbulence in the bond market unnerve global investors. President Donald Trump's Air Force One returns to the U.S. due to an electrical issue as the U.S. president heads to a Davos gathering overshadowed by his growing fight with Europe. And much more coming up from Davos, including conversations with Egypt's investment and foreign trade minister, the CEO of the UAE's G42, and Nigerian finance minister, Wale Edun. It's just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zabasai. Saja in for Jumana Bersetchi. And the markets are awaiting that highly anticipated speech from President Trump later today in Davos. So if we take a look at where markets are positioned right now, potentially, if you look at U.S. equity futures right now, at least reversing some of those losses that we saw on Tuesday, we are seeing S&P futures up just over 0.3%. Why that is significant is because we did see the S&P closing Tuesday down more than 2%, erasing all of its gains for 2026. The NASDAQ also getting put into negative territory for 2026. It really was a sell America trade on Tuesday. The question is, how long does that persist, and potentially where else do we see that showing up in the markets? If you take a look at the U.S. 10-year yield, we are seeing yields lowering just a bit, at least with the U.S. 10-year down just about 1 basis point. On Tuesday, as we had been reporting, we had seen a global bond sell-off, largely sparked by what we did see in Japan, though. We got a bit of calm rhetoric as far as it goes from the Japanese finance minister, also Treasury Secretary Scott Bessent in Davos speaking. But at one point on Tuesday, we did see the U.S. 10-year spiking to 4.307%, its highest rate since August. So watching clearly where we see global bonds go from here, the U.S. 10-year yield at about 4.2746 there. Gold is clearly showing that safe haven still in demand, up just over 2% there to be within a hair's whisker of $5,000. Many people still expecting a continued upside for the yellow metal. And we have Brent crude on the board down just over 1% to trade at about $64.23 a barrel there. A bit of geopolitics and still potentially some supply forces factoring into some of the price action there. And let's just bring you our terminal chart for today, showing that geopolitics still permeating across the markets, showing a bit of concern. But as our markets editor Anthony Stephen pointed out, surprising unity we're seeing between the U.S. and European VIX and DAX index, highlighting potentially some centrality to this transatlantic relationship. Potentially that can be a voice of calm in the shaky markets, though, as we have pointed out, the VIX touching at 20 on Tuesday as we continue to see geopolitical fears globally permeate throughout the market. Let's check in, though, on how markets in Asia are faring. Winnie Xu is in our Hong Kong studio following that. Winnie, it's looking like a bit of a mixed picture. Walk us through what you're watching.
Exactly. For Asian stocks overall, still under a bit of pressure tracking those losses from the U.S. overnight. However, we are seeing that the Kospi still holding up quite well, even after that strong rally so far this year that pushed the index up about 16% already. However, like you mentioned, the key highlight today is still the Japanese market. So we flip the board and take a look at how across asset Japanese stocks and bonds have been doing. And as you just mentioned, the bonds are really showing some recovery here, especially after the finance minister told market participants to calm down after that big bond sell-off. And we're talking about 40-year yield here earlier actually falling about 22 basis points to cross that 4% levels. And when it comes to the 30-year yield, also falling as well. But Japanese stocks down about 1% with losses led by the financial sector as investors start to question if these banks are actually able to manage these risks with bonds fluctuating so much. Back to you, Jen.
Thanks so much, Winnie Xu in Hong Kong for us there. Winnie, thanks as always. Now, Emirati artificial intelligence firm G42 expects the first shipments of some of the world's most advanced chips to arrive in the country within months. CEO Peng Xiao spoke exclusively to Jumana Bersetchi in Davos.
In this complex world of AI, nothing is straightforward. But I must say that through the past half a year, since the May summit in Abu Dhabi, we've made tremendous progress.
Yeah.
I'm happy to share with you that the first batch of the most advanced AI chips will be shipped to the UAE probably in the next couple months.
And those are mostly NVIDIA chips?
They are mostly NVIDIA, but we also received the export license for Cerebus chip, which is a company we backed, a startup in California, and also AMD.
Yeah. Did you have to give security assurances to the U.S.?
Absolutely. In fact, it was not just a theoretical pledge. It's something we had to practice for the past 3 years now. to physically demonstrate we have the ability to ensure the safety and security of this advanced technologies from the U.S.
i.e. that there's no possibility for that technology to be passed on elsewhere.
Cannot be transshipped.
Yeah.
There's no backdoor for remote access by unapproved parties, so on and so forth. Yes.
Let me ask you a big picture question, which is the fact that obviously 2025 was a big year for AI just in terms of the mainstream discussion around it. And I think there are pockets of the market where people started to speak up and say, there's so much money going into this space, especially on CapEx investment. It's going to be really difficult to generate a return on investment. Where do you stand in that debate?
I think there are three probably major factors to cause concern or doubt or even fear in this global AI movement. One is that it's clear now, as we discussed earlier, AI has entered our societies. AI is demonstrating it potentially can do many things humans are doing today. So job security is one concern. That's number one. Number two, as we have seen, AI does require so much electricity. Especially in the US, there are such debates already. Can these data centers eventually take power away from people who need it, to be left in the cold and have AI consume all the power? This is power concern, number two. Number three really is a concern about a global race. Can we be actually left behind? And what this means for government, for national security. I think all these are factors to cause certain pockets in the US and elsewhere. People are confused, concerned, and asking for a pause. But I think it's a mistake. Because if we pause, say, in the US or the US ecosystem or US allies, many other nations.
Now for more on that interview, Horizon's anchor Jumana Bersetchi is joining us now. So Jumana, it seems like that's a positive update for the UAE's AI efforts. Walk us through more of what he told you.
Yeah, most definitely. And full disclosure, it was the first time I actually speak to the group CEO of G42. So it was really informative to sit down with him and have that exclusive conversation. I think, the main headline here obviously was the big announcement towards the end of the year last year that the UAE are getting access to those advanced chips, which are obviously very central to the whole AI build-out. And the UAE have a massive ambition with Stargate. The group CEO there, Peng, actually confirmed to me that the first 200 megawatts of Stargate will be up and running in the next couple of months. They do have ambitions to ramp it up by a similar amount every quarter or so. So we'll see how the build-out goes. But of course, it was actually a major feat for the UAE and also Saudi Arabia, because Humane also got access to those chips. To get access to some of the advanced technologies. But I think if you listen to the rest of the discussion, we talk a lot about the broader AI landscape. And one thing that you may have heard towards the end of the package that we just played there, he was saying it would be a mistake to pause, i.e. there are a lot of conversations going on in the world right now, and even in the US, about the speed of the uptake and the speed of the digital infrastructure. A lot of voices are concerned about the amount of money that's being spent, but also what AI could eventually do to job displacement. And he's saying it would be a mistake to stop because the train has left the station, and ultimately it is of national sovereign importance to keep investing in your AI build-out, which is exactly the vision that the UAE have under the National Security Advisor Sheikh Tahnoun, which is a big focus for the Emiratis. So really interesting discussion. Obviously, we spoke about the geopolitics as well. And one other point he said is, I asked him about whether the build-out is so fast that it's not going to be commensurate with demand, i.e. demand is not keeping up with supply. He said it's going to be the other way around. People are not building data centers quickly enough to satisfy the demand for compute that's to come.
It's really quite a fascinating discussion that's being had about AI there. Great interview there, Jumana. Let's just stick on the UAE, though, because the UAE was actually one of the first signatories of Trump's Board of Peace. Slightly pivoting our conversation, though. Can you talk about where President Trump is at in terms of getting other signatories on board?
It is great to bring this up because today, as we spoke about earlier on the show, is going to be about President Trump's arrival, his speech later in the afternoon. Obviously, a lot of focus on Greenland and the tensions there, but as well, he will be talking about some of the successes in the Middle Eastern region, namely the establishment of border peace, which is representation of phase 2 of that Gaza ceasefire that was agreed to at the end of the year last year. And so we have found out in the last couple of days that many invitations have been sent to heads of state around the world. Some of them have accepted, including the president of the UAE, MBZ. He said overnight that they're accepting that offer. Others are unclear at this point. Also, surprisingly, President Putin was invited to be on the Board of Peace, which is somewhat ironic, I guess you could say, given the war that's raging in Europe. But I think there's still a lot of lingering questions about exactly what the role and the mandate of the Board of Peace is going to look like in terms of governance, in terms of funding as well. A draft charter was released in which it seemed as though the U.S. administration was asking countries to put up $1 billion to remain on the board. There was lots of pushback vis-a-vis the role that the U.S. are going to have overseeing ultimately the effectiveness of this board. And so I think it is still very much a work in progress. And actually yesterday, the Qatari PM sat down with the World Economic Forum president. He was asked about it. He said, look, this is the right pathway. They're doing the right thing. The most important thing here is that the ceasefire prevails, that calm is restored, and that ultimately the humanitarian aid and the calmness on the Gaza Strip is the main priority for the establishment of this Board of Peace. And ultimately, that will lead to the withdrawal of the IDF and Israeli forces from the Gaza Strip. There's still a lot of sequential processes that need to be got through in order to reach that point. One thing I will say from a programming perspective is, yes, there has been a lot of pushback on the Board of Peace, but our colleague Anne-Marie Hordern will be sitting down with Steve Witkoff in a couple of hours. So expect a lot of questions on the Board of Peace, its composition, and ultimately what their ambition is.
Yeah, quite a packed day ahead for you and the team. Really appreciate you joining us and walking us through it all. Jumana Bersetchi, Horizons anchor, joining us there in Davos. Jumana, thank you so much. Now, for a look at some of the other stories we are following today. Saudi Arabia has sold more than $20 billion of international bonds since the start of the year, setting a record for the month of January. Companies and banks are joining government fundraising as they turn to debt markets in response to tightening liquidity conditions. The finance ministry is planning to borrow $14 billion to $17 billion from international markets this year. Goldman Sachs is set to grow its headcount in Doha as part of a deal expanding its strategic partnership with the Qatar Investment Authority. The move could see the sovereign wealth fund inject $25 billion into the Wall Street Bank's asset management arm. Goldman says Doha will become a strategic hub and its largest regional office for asset management. And Turkey's state energy company is in talks with Chevron to jointly explore for oil and gas. Sources tell Bloomberg the potential accord would involve Turkish Petroleum working with Chevron on seismic studies and drilling. The talks are part of Ankara's efforts to boost energy production and cut its dependency on imported oil and gas. Now, coming up, we hear from UBS CEO Sergio Ermotti on why he thinks Europe could be making a dangerous bet. This discussion next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Lululemon shares closed 6% lower after it paused online sales in the U.S. of a new gymwear line. That's after customers complained the leggings are see-through. The Get Low collection was launched just 3 days ago. The company says the products are still available in U.S. stores and in other markets. In 2024, Lululemon pulled a line called Breeze Through after customers reported unflattering fits. And Netflix shares slumped in late trading after the company warned profits will come under pressure in 2026. That's despite fourth quarter results beating estimates. The streaming giant says it plans to increase program spending by 10%, with the Warner Brothers deal expected to add $275 million in costs this year. Netflix forecasts lower than expected profit for the current quarter, even as it plans price increases and expects ad sales to double this year. Now let's turn back to Davos. UBS CEO Sergio Ermotti says Europeans tempted to weaponize their holdings of U.S. government debt are making a dangerous bet that risks backfiring. He spoke to Bloomberg in Davos. Take a listen.
Diversifying away from America is impossible. I think that in any major asset allocation, one could probably think about having an overweight or underweight, but diversifying away from the U.S. and also from the dollar is a quite dangerous bet. You know, things can change rapidly, and the U.S. is the strongest economy in the world. The one who was the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the U.S.
There seems to be a difference between how the politicians and the policymakers talk about America right now and the backdrop for international relations and how a business person thinks of America, the economy and the opportunity. I've mentioned this stat a number of times already today about the survey that PwC put out. They surveyed 4,500 CEOs and the top destination for capital for investment, America, and it was up on last year. As a bank boss right now, a CEO who's thinking about expanding around the world, why is US still top of mind for you?
Well, because from our standpoint of view, we see two big levers. First of all, wealth creation, GDP growth, innovations, and also more idiosyncratic to UBS is that we see potential for us to become more present, increase our market share. So that's one place. On the other hand, we are also very big in Asia. I mean, we manage $1 trillion of assets there. We are growing very fast. The economy is growing. Half of the population in the world is living there and is creating new wealth.
UBS CEO Sergio Ermotti speaking with Bloomberg's Jonathan Farrow in Davos yesterday. Now, coming up, Nigerian Finance Minister Wale Edun says the country aims to borrow less and invest more. That's next. This is Bloomberg. Mali's gold production fell sharply last year after a dispute with Barrick Mining shut the country's largest operation. Industrial output dropped more than 20% amid a standoff with the ruling military junta. The dispute was resolved late last year, but the disruption pushed the West African nation's gold output down for a second straight year. And Process CEO Fabrizio Bloisi is pushing back against EU antitrust rules, calling them, quote, absurd. Speaking with Francine Lacroix in Davos, he said the continent should be focused on investing more at a time when the world needs big tech in Europe.
I think Europe should be talking about how we invest more and faster. But actually, we are talking about how I divest faster. I think this is absurd. I think the competition authorities in Europe said no to the Siemens-Alstom deal 5 years ago to create a big transportation global business. We don't consolidate banks. We don't consolidate telecommunication. We are not consolidating or have a bigger group in food delivery. I think this is a mistake. I think this is we are behaving as if we were in 1996. We are in 2026, and the world now requires big tech in Europe.
Let's turn to the region now. Nigerian Finance Minister Wale Edun says the nation can access international bond markets if it needs to, but would prefer to rely more on its own resources. Speaking to Francine Lacroix in Davos, Edun said he is promoting fiscal reforms to boost the economy of Africa's top oil producer.
In a situation where the world is fragmenting, where there's a move back from multilateralism and from world trade at the global level, a move back from globalization, we worry that that will lead to less trade, less growth, and of course, less opportunity for countries such as ours and less investment. And that, at the end of the day, leads to a society in which you have less growth.
I mean, do you worry about an imperialist America also when it comes to oil facilities and things like that? Or should we not worry about not be too alarmist and just try and stay the course?
We try to be positive and look at it that as a country that has resources, that has critical minerals, maybe we'll be asked to do a transaction that will be mutually beneficial. That's the way we look at it.
Minister, talk to me a little bit about your government borrowings plan for this year, considering the wider budget deficit projected for 2026. 2026?
Yes, on paper we have a wider budget deficit because we've got the approval of the National Assembly of Nigeria, the Parliament of Nigeria, but actually the commitment of President Bola Ahmed Tinubu under his renewed hope agenda at the stage we've got to now, after removing major distortions, after stabilizing the economy, is to consolidate and, in fact, to rely less on debt and to try and drive investment. We're here in Davos to tell the Nigerian story and to show how investable Nigeria is now that we have a stable macroeconomic environment.
Are you planning any further Eurobond issuance? Or other issuances?
We have the latitude to do it, but as you know, if you want to go to the market, first of all, the market has to be receptive. Yeah. You yourself have to be within your guidelines and your rules and regulations for borrowing, your margins for borrowing, and of course, the timing has to be right. So we'll see down the road what will happen in that area.
But could we expect something big on Eurobonds this year, or is the appetite not there?
We're hoping to rely less on borrowing, but we'll see what happens there. We have the latitude to come to the market. We were very well received the last time we went to the market, but honestly, our emphasis is on investment and particularly driving domestic investment, increasing domestic savings for investment in the Nigerian economy in order to grow it.
Nigerian Finance Minister Wale Edun speaking there with Francine Lacroix. Plenty more coming up from Davos, but let's take a quick check at where markets are. U.S. equity futures nudging higher after a brutal sell-off day on Tuesday. Plenty more ahead. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.